Worries over a potential tax package that would increase the U.S. deficit caused a sell-off in Wall Street stocks, reflecting the sour mood. Asian markets fell. U.S. bond markets continued to warn on high U.S. deficit worries from President Donald Trump's tax bill. Weak openings in South Korea, Japan and Australia led to a regional stock cage, dropping for the first time in 3 days. Overnight on Wednesday, S&P 500 fell 1.6% to mark its worst monthly decline. The sell-off in U.S. stocks also stalled an $8.6 trillion rally from April's tariff lows. However, futures pointed to a green open for the U.S. stocks on Thursday. The wider market sell-off is a test of investors' nerves after poor U.S. bonds auction on Wednesday. Opposition to Trump's tax cut plan and the ballooning deficit is showing up in the bond market, with treasuries falling across the curve Wednesday. U.S. bond yields surged past levels seen during April's market rout. The yield on U.S. 30-year sovereign bond remained over the crucial 5% mark, and the dollar fell for the fourth session in a row. In Japan as well, the sovereign debt market is flashing a warning to the central bank, and dialing back its bond purchases needs to be processed and done with great care. Investors will monitor the Korean won after the currency jumped to a 6-month high. In commodities, oil continued its fall, fueled by concerns about an oversupplied market reflected in rising U.S. inventory. Benchmark Brent crude traded below $65 a barrel after shedding about 1% over the previous two sessions. With geopolitical concerns in focus, gold rose for a fourth session on Thursday. The yellow metal is shining bright again after a brief pause, with bullion changing hands at around $3,340 an ounce. The other recent safe haven asset of recent times, Bitcoin surged to a new all-time high of over $109,000. Investors will keep an eye to see if the OG token takes off from here or reverses back below that level.